Alright, let's look at how to determine support and resistance levels. The first thing we need to do when we're looking at a chart and we're trying to determine where the support and resistance levels are is we need to understand why does the price move, right? What causes these price fluctuations in the market? And the reason why that is because when the price falls, the sellers are basically overcoming the buyers. When the price rises, the buyers are overcoming. They're stronger than the sellers, right? And when this happens repeatedly, we have these zones that occur. For example, we have a zone here, right about here. Now, these are highly subjective, of course. Everybody sees a slightly different zone, a slightly different area. But overall, they're pretty similar. So we have these two zones that are created, that occur in an interval of time. And these are what we call support and resistance. Now, the higher area that doesn't let the price go up, this is a resistance, like it resists the price from going higher. And the lower area in this interval of time is called support because it supports the price. It doesn't let it fall further down, right? So we're going to tag these areas with an R for resistance and an S for support. Very good. Now again, why do these areas occur? Because this is where sellers are stronger, they push the price down, then the buyers finally enter the market, they push the price up. And you see, this is the original point of these areas. We have one original point here. We'll make it red because these are the sellers entering the market. And this is the origin story, if you will, of the support. We'll make it green because people are buying here. Okay. Now you notice I didn't represent the support and resistance areas with a simple line like this. Some people do it this way. You don't want to do that because not every trader, not every bank out there on the market is going to enter at the exact same point. They're going to enter at this general area, but not the exact same point. Okay, so because of that, we want to be sure to place our trades within an area and not a specific price point. That's never going to be accurate enough. We don't know what's going to happen. Okay, so you want to have the whole area covered. Let me hold this microphone so I can hopefully sound better. Alright, so we have an original point for resistance and an original point for support. Now what happens the next time the price comes into this area? Sellers are ready. They're like, hey, you know what? The price might bounce back down from here. So they enter another sell. They push the price down again. It gets to this area. The buyers enter, they're now interested, the price is low enough for them to enter, so they hop onto a buy. Collectively, they push the price back up, and so on and so forth. We have so many. Let me put this one major selling point to include all these sells, and then we have a buy here again, represented of course by green because they are buying and not selling. Alright, so what you notice finally, so this has been a range between support and resistance, the price kept bouncing back and forth. Finally, this resistance gets broken. And the reason it gets broken is because the more you test an area, the less likely it is for it to be respected. It's like if you knock on a wall or on a door sufficient times, eventually it's going to break, right? Now in the mentality of the market, of course, people get used to this price. The price keeps testing the area or the level. Eventually they know, okay, it's going to break, it's going to continue to go higher. And what you notice that happens is after the price, let's make this blue for a neutral, after the price breaks the area of resistance, generally what happens is it comes back to retest it, right? But now it bounces again from here. Hopefully that's clear enough. Let me make it white, probably better. How about that? Much better, much more visible, which is great. Okay, so it broke the resistance level, comes back down, it becomes a support now, at least for a while, right? And then it gets chopped through back and forth, which invalidates the whole area, right? So until here, let's say, we could say it's valid, and from here we have new areas. The market continues to create new areas all the time. So we have to draw accordingly. We go back and we draw a new area of resistance, support, and a new area of resistance. Again, they're highly subjective. That's why we need to be as general, as wide as possible, because we want to include all the entries of most traders, because we want to be on their side. We don't want to go against the market, right? So again, the market creates new areas all the time. You have to keep adapting to these areas. You have to keep redrawing them as the market dictates. Okay. All right. So let's recap. We have resistance area doesn't let the price go higher. Support area doesn't let the price go lower. Eventually, they get broken. You have to, and they become like resistance will become support, and of course some supports become resistance. If the price breaks down through here, for example, and then comes back up, then now it's a resistance area, even though it used to be a support. The market keeps creating new areas all the time, so you have to keep adapting, redraw your areas, and trade accordingly. Awesome. I hope this was clear enough. Let me know any questions that you might have in the comments. I'm very happy to answer them and clarify any doubts you might have. Thank you very much for watching, and I'll see you in the next one.